So we look at the market, nice bounce back after looking like we were going to get a little bit of a sell down. Of course, we're going to talk gold. That's been all the news here since the Friday sell off, and a little bit of a continuation today. But of course, nice for stocks, nice bounce back. The Dow up 500 points to 49,500 almost. S&P up 0.75%, Nasdaq up almost 1%, and Russell 2000 1.5%. Volatility levels, the VIX staying below 20, even with last week's bit of shakiness. Encouraging to see that volatility is not getting out of control here. Also, note on the major headlines that Friday's jobs report this Friday will actually not happen. Will be delayed because of the partial government shutdown and the data required to pull that together. So, but we got to talk gold and silver here because, of course, that was an incredibly volatile shakeout. In fact, the silver drop on Friday, biggest drop since 1980 on a one-day decline. You say, of course, things have basically run massively to the upside. We've mentioned for many months how our buy signals all last year had several of them. You can see that were very steady, but especially this latest one from the end of August, breakout buy around 318 went all the way up to a high of 509.7 there on the high there on Thursday. Of course, came off of that high and then got absolutely walloped there on Friday. You can see we closed at 496 almost and then traded all the way to 431, bouncing back to close at 445. And then today you can see down another 4% on gold, down to 427, the low so far 422. You can see there's a breakout level in that 422 423 zone back in mid-January that we've basically retraced back to. Often it's said on corrective moments in the market that price corrects either based on absolute price action coming down quickly or time doing more of the work in a sideways market. And you look at the prior couple of runs where the market maybe got a little too extended on the DMI lines, and we had a time correction last April through really that little brief shakedown in late July, but through August, and then it broke out at the end of August, right? And then we got that verticality, got a little quick price pullback there in October, but really it was a multi-month kind of a base being formed before this latest launch here to kick off the new year, and now it's basically a price correction more than a time correction with the severity of these losses, but it looks like an area where we should expect to see some firming. So I'm not saying that the gold run is over. In fact, you see, this is actually just a CCI bull retest today. That means that today's low should hold on a closing basis. I would expect 420 as a general number to be a number that holds. You see, our DMI lines have not converged. It's just like just got too stretched. The positive DMI got to over 60. The negative DMI got to under 10. That DMI difference of more than plus 50 points is far in exceeding anything we saw here, where we got up to about 44, 46 points, maybe a stretch right near that October high. So all that means is that things got a little too extended, and now we're going to go through probably a little bit of a base building phase, but it doesn't mean that the bull trend is over. But you got to look at silver for even more dramatic price action here, because look at this 2-day pullback where silver got all the way up here to a high on Thursday's high of almost 110, 109.83. Remember, it started the year, we closed at 64.4. So literally in less than a month, silver went up by more than 50%. I mean, that's just unheard of. It's phenomenal. And yes, that was part of the news, that why we came down from 105 to 75 with a low at 69 on Friday at the end of the month. Remember, that was the last day of the month too. And of course, that means that that dramatic pullback was the biggest one-day drop since 1980. But you see that now we're right back into this generalized breakout area around 70 and two lows, 69 on Friday, 68 today, but holding 71. Oh, by the way, look at our DMI lines. They're right back into that DMI kiss where they're almost touching each other, 31.7 on the positive line, 31 on the negative line. This is saying that it's a probable good support area. I'm not saying we're going to get back to the old highs anytime soon. We're probably going to go through some backing and filling, but I wouldn't be surprised to get back to the Friday highs near 90 in the coming month or two. So all point being that there's some opportunity there, I think, but of course, not going to be the verticality probably that we saw outside of those bands, right? So you got to keep all that in a relative perspective. Go over to the markets, and like I said, pretty impressive action when we're coming into the day with all the worries about the meltdown in the metals, some meltdown in Bitcoin. Basically the Nasdaq having some indigestion, and you see S&P taking aim back at that 700 level. It touched it last week almost, right? We got up to like 688, 698. So kind of testing into that round 700 level. But you see, that was a DMI kiss on the low back last Thursday at 685 ish. And while we tried to get below it, we did not. And so that's a good sign for equities. The NASDAQ, even better sign. We had the news, especially on Oracle, that they might cut up to 30,000 jobs in order to fund their AI push. And then on top of it this morning, announcing like a $50 billion financing deal of their own. You can see Oracle actually opened higher on that news, and now it's back to flat today, opened at 171, up about 7.5 points. But basically, you can see here back to flat. Oracle's been a laggard, but that was an interesting sign on their commitment to the AI push. And so, of course, that's another shot in the arm for tech stocks and, of course, the tech-heavy NASDAQ. We've said the NASDAQ chart's not as good looking as the Russell, the Dow, or the S&P. And in fact, the Russell remains our favorite. You see the pullback this past week right near our DMI touch point there. Nice little pullback, nice healthy. Oh, by the way, old resistance at 258 becomes new support. Look at the low on Friday, 257.94. That's classic old resistance becoming new support line in the sand there, and that's very bullish, I think, for the Russell. There's also a CCI retest there on the commodity channel index, but that's another just nice trend following tool we like to see. So these are very healthy patterns here, folks. The Dow, of course, doing some battle just underneath the equivalent of 50,000. DIA 500, we're 494, having touched up into that 500-ish zone almost there, 496-ish earlier in January. But again, that was in the healthy DMI pullback that held that low, even with the undercut slightly on Friday intraday. We retook it by the close, held it, and then big pop up 1% today. So these are really good signs. Of course, the bond market is a different picture, right? Bonds not doing well. Of course, we had the news that President Trump had picked Kevin Warsh, who's a little bit more hawkish as the new Fed chair. Most people have been thinking they're going to be as easier than Jay Powell has been for the economy, but maybe that's now called into question. So bonds underperforming, that means longer term rates are edging higher. And of course, that's something to pay attention to as what could derail all the economic optimism out there. But again, I think it's encouraging. We look at the Mag 7, we look at the earnings news coming out, we look at a nice rally back up for Apple. You see it popping back up nicely. Of course, Meta got a validation of their big spending plans with the big gap up. It pulled back a little bit after the earnings gap, but you see that was a positive gap. Microsoft went the other way, went down on the earnings. And you can see that was a pretty nasty one. That was a classic break of the 200-day retracement right up into the yellow 200-day line there within literally a point and a half or so, and then the whack down. So that's positioned as a little bit of a laggard. Of course, NVIDIA, the chip leader, still hanging in there. It has earnings at near the end of February. But again, lots of things to pay attention to. But Tesla also had its earnings, and I had said in a web event that, hey, it's not about electric vehicle sales, I should say. It's about robotics now and self-driving technologies. And it's basically paused after the earnings. You see the DMI lines are net negative, but basically in the short term. But we're above the longer term moving average in yellow, and this looks like a healthy pause. I would expect 400 as supportive, and eventually a run to new highs as they continue to push out on the robotics angles there. Of course, Google, parent company or Alphabet, her company of Google, breaking to a new high today. One of the best looking Mag 7 charts out there. Of course, that's Alphabet, part of our AAA options that we trade at Amazon, as well as Apple, as well as Alphabet, parent company of Google. GOGL is our preferred symbol there. But you look at Amazon's chart as well, you see a little catch up there, bounce back here. But Alphabet, GOGL, the best looking, in my opinion, of the Mag 7 names, and getting some headway on ChatGPT and OpenAI. So point being that, all things right now still look like all systems go for the bull market. The shakeout this past half month or so in some of the tech areas, and of course gold and silver, just cooling some maybe excessive optimism or speculative fever. But I think the fever, as it breaks, we settle back into a nice rational pattern where there's still more upside ahead for the metals and the inflation picture, and of course also for the broader stock market. So lots of ways we like to trade it here with our services at Big Trends. If you want to learn more about our Big Trend services, how we trade everything from Tesla to Nvidia to Palantir and everything in between on a lot of the big names in the market, just call us at our 800 Big Trends line or drop us an email over to clientcare@bigtrends.com. Hope you have a great trading week ahead, a very positive and prosperous February, and position you for a prosperous all of 26. Call us and we'll see you again next week. Trade well and stay well.